Hi everyone, and welcome to tonight's Q&A on the 4th of November. Goodness. How is everyone? Can you hear me okay? Can I just have confirmation you can hear me okay?
Okay.
Great. All right. It's pretty, you know, you've had a pretty long week when you're actually checking the date at this time of night to know what it is. It's hard to believe actually that we are already, well on the way to non-farm payroll week. It feels like only last week actually we were talking about this week being a little bit slow, and it's promising to be a little bit more than that. Actually, we're starting to see a little bit of action, which a little bit unusual. Some of them are behaving exactly as you would expect prior to a non-farm payroll number, and others are actually moving a little bit. So we'll definitely jump into a few of those. We've got a lot of questions to actually answer, and of course, if you've got anything that you want to discuss on the way, just shout out. If you haven't got a microphone, just type it into the question here. So yes, welcome everybody, and thank you for joining us on I know it's a bit late for everybody in Australia, but yes, I don't even feel tired at the moment. We've got so much going on that I'm actually working at this time, believe it or not, at the moment, so just to catch up. So this is actually a relief to actually get away from the monitors and actually do some live analysis. So let's jump in to we'll do a quick analysis of the markets overall, and then we'll jump into a couple of people's questions. All right. So Aussie USD hasn't changed a hell of a lot since yesterday, but again, the 20 moving average is under siege on the daily. I do fear for it here. This is its last line of defense. I'm not surprised that it's here before non-farm payroll, but I don't even know if the Aussie really cares about that. It had a flagging of the potential interest rate rises. The free money's probably going to dry up in 2022 and especially in 2023. I think they've already made that very, very clear. Whether that translates to what happens in the US with their interest rate decisions, well, we're not so sure. But at the same time, our reserve, or the equivalent of the Federal Reserve, is going to make their decisions on that, and that's going to have a big effect on the Aussie, obviously, and it's already starting to see that weakness. So look, what I love about TA, I know you say it in hindsight, and you say, well, everyone says, oh, TA is awesome in hindsight and blah 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 blah. We talk about these levels all the time, right? Like, it's no secret we were talking about the 200 moving average here. We thought its last line of defense was maybe the this level here, which is the 75.80, but that was the last level. That's where you were putting your stop losses effectively above there, because if it was going to take a crack at that level, that was probably what was going to be pulling it up. But the 200, you will find on the bigger time frames are important, and I don't pay as much attention to them on the smaller time frames, but generally a 200 on a smaller time frame will translate to something more significant and meaningful anyway. So I mean, what I mean by that is, if you're looking at a 15-minute chart and you're looking at a 200 moving average, it's probably going to be very close to like a 20 moving average on a daily or something like that. That's what I mean. So it's not like it's actually even though it is a 200, it's actually translating to something probably a little bit more significant to that time frame. But a 200 on the daily is important. It always has been and always will be. So no surprises here, and I know a lot of people shorted this here. I know they were. We didn't like it mainly because it was being uncharacteristically strong versus a lot of the other dollar-based pairs. So it wasn't a great trade for me. But then when you look at it, you say, well, okay, it was strong, but it hit a level that it was going to reverse on. And it was a pretty easy trade when you think about it. I didn't actually short it. I know a lot of people did, and I'm glad they did, because they saw the technical and traded it regardless of what it was doing on the way up there. I didn't like what it was doing because it was doing the exact opposite of what the other dollar-based pairs were to get up there. But the end result was the same, right? It hit a very, very strong level of resistance and then sold off. It's right at that level now where it's do or die time for it. Like we said last night, if this fails at this level here, and you know it's a strong roll reversal zone, not super strong. I mean, it's strong enough, but I don't know if it'd be holding it up for a long time. I'd be pretty scared if I was actually if I was relying on this level. I'd be a little bit concerned. For me, it has to close below the 20 moving average, and probably below the 50 now, to be convinced that I think the 73 sort of 20 area, this area here, is the real support for it now. I think if we can get through these moving averages and get a close below the 50 especially, I think we've got a pretty easy move on down to this level. I do like it now. I like it. I didn't like it prior, but I do like the short. The short story is a good story. because it makes a lot more sense from a technical standpoint. We'll look at the dollar index in a sec, but yeah, to me, this is looking pretty good. Is anybody in the room, did anyone short this? Just out of curiosity, that's actually in the room. I know a lot of people emailed me and said they shorted it, but is anyone in here actually benefactor of this short? Not really? Yeah. So Stephen, just as an option, yeah, I know you're delving very, very deeply into the options, and we're going to be talking about them very, very soon. If you were going to trade an option trade, say, let's pretend this was CVA or BHP or ASX or anything that's not a currency. And by the way, actually, I do have some news that is actually probably pretty good. There are a couple of brokers that are actually starting to work in currency options that are actually remotely reliable. Now, I know that there's a lot of people who have professed to say that there was options in currency, but they weren't real options, right? So you were paying extraordinary amounts for the premium. They were kind of fake. They weren't regulated and blah, blah. Yeah, you wouldn't have really touched them, right? And I'm not talking about binary options. That's just a dirty word. You would never have used a binary option. But I'm talking about options that, are remotely meaningful. That excites me a lot, a lot. I can't even begin to tell you how much that excites me, because in my mind, currencies are far more volatile than stock. That's a given, right? We know that. We know that they move around a lot more. We know that the thing with the stock and with indices is when you're trading options on top of them, they're very straightforward. Most of the time, it's a range-bound market, which is actually an income-generating dream. Perfect, right? Everyone wants to generate income. No worries there. But it's difficult to get good liquidity and good meaningful volume on very, very volatile stocks. It becomes a difficult process, especially in Australia. A little bit less so in US markets, which is far more prevalent to volatile stocks actually having good liquidity in their options. But if they introduce something that is meaningful in currency, where we can actually trade options in the currency markets, with what you want is, what you definitely need to see is reliability, and they need to obviously be safe. They're the two things that you must have before you trade an option in currency. But if that is true and they're delving into that world, it's going to be a very, very exciting time, because it really opens up the volatile options strategies that, they're the ones that actually make you quite a bit of money. Income generation is awesome, don't take me wrong, but it's a process that, I mean, that's probably a stupid thing to say. How could making money on a regular basis, even though it's not a lot, like not big returns, how can that be boring? It's not. I mean, it's not boring, right? But what I'm saying is, it's probably more exciting to talk about. Like, I could talk about income generating strategies all day, and you're going to be like, "Oh, Ty, please, like, give us something that's going to make us 10%, in a week." In the volatile markets, we can, and that's why I'm excited about those potential trades in the currency markets, because they will give us the best of both worlds. We'll have volatility. We can use the volatility strategies to trade currencies. So hang tight on that one. I'll let you know more when I know more. But I know that the feelers are out, and I've been asked to do some test runs. So that does excite me just a little bit. But anyway, Stephen, what I would be doing here, that was an option trader's dream, regardless of whether you're looking for volatility or not, really. Because the good thing about the options in currency is that you do get a lot more setups everywhere. Any time frame, take your pick, we're going to find them. So it opens up a whole new world of opportunities, which probably means more work for us, but that's okay, because that's work that I enjoy. But anyway, that was a good short. There's no question about that. Very strong resistance, but it needs to break through this level here for mine. If it does that, I think that the 73.20 to 29 is, it's a pretty easy zone, really. I don't think it's going to have a lot of trouble getting there once it does get, and it'll probably get there fairly quickly too. So that's probably 100. By the time it gets through the 50, you're probably looking at about a 70 or 80 pip scalp. But it's a good one, and I do like it. All right, let's move on to the US dollar CAD. Bear spread above the bear spread above the 200. You could do there are lots of things that you could do there, really. Yeah, like a lot of people would actually trade that by just actually buying the put. Like wouldn't even in currency, because the movements are so quick. You could almost start. You could go, if they're cheap enough and the premiums are right, you could almost just go the straight option on it too. You could do that too. Really, it's going to be great. US dollar CAD. Now, US dollar CAD's trying so hard to get up. It needs to bust past this 20 moving average. There's no question about that. The 4 hour still hasn't closed above the level that I wanted it to. I need a 4 hour close. I'm still waiting for that. Hasn't happened. Tried, but it didn't break through that level and close above it. As you can see, had that rejection. But we're getting flatlining moving averages now. It's holding it up. No real surprise. Non-farm tomorrow night. No real surprise to see this, but I still believe that this is the rounded bottom that we do like. I think that this is wanting to go along. The good old CAD. MACD, is looking very, very. I really love this setup. I mean, I love seeing this. We've got the MACD rising, pretty quickly on a significant time frame. We know we've got the rounded. I mean, you only have to go to the 4 hour to see how round that is, and it is trying to push up higher. So for me, it's probably just a matter of time. We need the evidence, of course. We still need to see the 4 hour or the daily close above a new high here. But once it does that, I think we're heading up to where we want it to be, which is around that sort of 125.80 area. So I think pretty good trading on the CAD. I do like this one. Okay, US dollar yen. This is doing a very non-farm payroll type thing in the week. That is, I'm just going to check whose microphone is that is on at the moment. Dave, if you're in there, can you just scope the microphone to see whose microphone's on, because we're getting a bit of background noise. That'd be great if you wouldn't mind. The US dollar yen's doing the US dollar yen thing, and not surprised here. It's finding, well, you can't trade it. I mean, there's nothing to trade here. It's got to break above the 114. I've always said it needs to make a new high now above that sort of 114.50. If we get a new high there on a daily, I'll be very, very impressed. And if it does that, we need to go a long, long way to find the next target. You can see how important this area is. But, for all intents and purposes, this may well be flagging or pendenting, if you like, because it's really a pendant more than it is a flag. If this is and I'll tell you what I'm seeing. And look out if this plays out. If this one does play out to the pattern that we expect, and it may well do. It's done it before the yen, actually, a really, really big pattern. If it does that, boy, oh boy, like this is probably heading to, I'll tell you where it's heading. Literally, that move there to there needs to be replicated. It'll be pretty much heading to about 118. So that is the target for that. So I know that sounds extreme and it sounds crazy, and you're probably thinking, Ty, don't be stupid. That is not stupid. If that works out, that is your pennant. That's a weekly pennant. Okay, that's your flagpole, your pennant. If it breaks out of there and breaks above the 114.50, that target is seriously going to be a 118 target on that pattern. So very, very good pattern. Don't think it can't do it. It can absolutely do it. When this moves, it moves very, very quickly. So I'm watching this area with a great deal of interest. You can see there, it's probably a little bit more straightforward, even though the weekly obviously the weekly's got a lot better pole. What this is doing now is wedging. I mean, you can call that a symmetrical triangle if you like, but it's a symmetrical triangle that's a pennant on a weekly. So I like it. I do like this one, but I think it's got a little bit to go yet. It's pendenting right underneath the level that we want it broken. And it could be enough that it gets enough momentum to actually break that level. And when it does, it's going to be happy days. You like that one, Kilded? Or you like the Euro CAD better?
Still stalking the Euro CAD. Yeah, it's been a bit stubborn, but it'll get going.
All right, we'll get to that one. I think a few of these are being a little bit stubborn, but sometimes, I don't mind that little bit of stubbornness, because it teaches us a little bit of patience, and when they go, I find that they're worth the wait. Actually, a lot of the time when they are being a little bit stubborn, I find that they do actually go in the direction that you want them to go to, a little bit more often than not. And I think it comes down to that it comes down to that patience, I think. So we'll check it out. We'll check it out. But this is
That looks good, Ty. That looks good. The yes, I haven't really looked too much of that. No, it's a good setup.
Yeah, it's building up to be, isn't it? It is building up to be. And what I like about this one is there's not a lot of white noise in the background either. That's a very full setup where it's getting a lot of market action from top to bottom all the way through. If you go to a 4 hour, it's going to look even. Look at the 4 hour. I mean, that's basically channeling inside the pennant and actually getting smaller and smaller and smaller. So
coiling.
Yeah, absolutely it is. And you know we know what happens when something coils. Yeah, the explosion's usually big. So definitely one to check out. I think that you can, you know, at an extreme, if you really, really want to scalp it, you could probably scalp the top to the bottom of the triangle or pennant, call it whatever you want, on a smaller time frame, like the 1 hour here. You could do that if you really, really want to get involved in the trade. But I think there are better scalps at the moment. I think there's probably better scalps. So I think that it's definitely one to watch, and I'm waiting with bated breath for the break here. Okay, so that is what we're looking for there. Dollar index. Let's have a look at this. This is trying so hard to go long. By golly, you know what we think of the 94.50 level, and if it breaks that, we know it's going, or we have a very good idea that it might be going to 97 to 98, which is a very, very big exaggerated move. But hey, doesn't that complement what we're looking for on the? Let's think about it for a second. If this goes and breaks the 94.50, right? So if it goes above and breaks that level there, what is that going to do for all the things that we just talked about? It's going to send the US dollar yen probably propelling up. It's going to send the US dollar CAD probably propelling up. Both of those trades look like they're long anyway, right? They don't even need the dollar index, but of course they do. But what I'm saying is, you know, even if we didn't do the dollar index analysis, you know, we're pretty comfortable that we've got some good long moves potentially about to happen on some of these pairs. The Aussie, we think, is yeah, a reasonable short down. Like if that dollar index goes all the way up there, this ain't stopping here, by the way. That's just the first stop. So, you know, realistically, a long dollar index, and this is why I guess it's hard to for me to explain why, because you probably say, well, you say not to have bias type, but you always sound like you've got some sort of bias because you want something to happen. It is a bias in the sense that I do want something to happen, but it's not because I wouldn't trade it the other way. I want it to happen because it makes the most amount of sense for all the other trades. So for me, you know, a dollar index that's shorting from here doesn't make as much sense for the other trades. So it's not that I wouldn't short it if the setup was perfect. And it's not like I wouldn't change my mind on the others, but they're the cleanest. Okay, so what I'm looking for is the cleanest trade. And the cleanest trade, and that's why I'm barracking. So when it looks like we're barracking, it doesn't mean that we're one-sided and biased. All we're wanting is the cleanest opportunity. And the cleanest opportunity right now is for this girl to go to 94.50 and break above it, because that's going to make some very, very clean trades on the other currency pairs. So does that make sense to everyone? Does that make sense? How? Yeah.
Yeah, and I'm just looking at that, Ty, and wondering if maybe that looks like a bit of an inverse head and shoulders on a smaller time frame there, maybe the 4 hours or the 1 hour. Just the way it dips down in the middle. Oh, no.
Yeah, it's kind of, it would be a really, really, really ugly one. It would be. I mean, it's hard to find a pattern for this at the moment, mainly because it's going a bit sideways. That's the thing with it. It is going a bit sideways.
Yeah, so, no, it looks more like it on the daily than it does on anything else.
Look, if you were really, really, really looking, I know exactly what it is you're seeing, because I know you very well, Dave. And yeah, and from a technical standpoint, what you're seeing is this. I know what you're seeing. Tell me if I'm wrong. That's the neckline that you're seeing. That's the shoulder. That's the head. That's the shoulder, right?
Yep.
Yeah. It's a very full inverse head and shoulders that's pointing the right way for a breakout. Now, if there wasn't as much price action in this shoulder, so at the problem with this, why it doesn't look like an inverse head and shoulders. Good spotting, by the way, because at the end of the day, you're identifying price action that looks right. So that's great, but it's difficult to see for people who maybe are not used to looking for inverse head and shoulders, because what they're looking for is that gap. But the price has filled the area. So what's happened here is we're getting a very big up and down action on all of the candles, and it's basically filled the whole shoulder up. But yeah, that said, the shoulder's resting on the 20 moving average, and it is trying to break that neckline. The only problem for that inverse head and shoulders, if that's how you were trading it, is that if it does break, it's heading straight into the hit zone that it concerns us. So it needs to do more than that pattern, if that makes sense. And it needs to, the pattern's great, and I'd love to see it work out, because it means it's going to get all the other things working out. But if we get a close on a daily right there, say for instance, that technically does break that pattern, and you say, okay, we can go. But really we can't go, because the real resistance is right there. I kind of wish that it was a little bit steeper, and the break of the neckline was actually a little bit higher, and that was a bit more defined. But regardless, I think we're still going to get the same result. If it goes up and breaks through the 94.50, it's going to be happy days. We'll be having a real party in the Thursday Q&A next week if that happens. I tell you what, I might even bring a ginger beer and get on camera. That's how happy I'll be about that, because that means really, really good things for that, and for that, the euro. So let's go on to the euro, the direct beneficiary, the real beneficiary of dollar strength. Now, again, I had an email during the week, I think it was on Tuesday, saying, why are you so down on the euro USD? You're always talking about it going short. It's not that I'm not down on the euro USD. It's going to go back to kind of what I just said. It's the cleaner trade for it is to go down. It's not, I actually couldn't care less whether it was going long or down, to be honest. If the technicals were better for the way up, I'd be saying the exact opposite. I'd be saying I want it to go up. This is what I want to happen to the dollar index. But the technicals make more sense for this to go down. It looks cleaner, right? So when you go to a daily, yeah, like that is starting to feel the pain. Like that pressure is building on this support zone. It's building, right? You can all see this, right? We can all see the same thing here. Extraordinary amount of pressure pushing down on this 115.40 area. Everybody can see that, right? I don't have to point that out. You can, let me zoom it in a bit. Like every day, this level is getting tested at the moment. And now the moving averages are bearing down on it, like bearing down. So what that's doing is pushing. Now you look at that and you're going to say, I know some of you are going to say, but hey, Ty, there's MACD divergence there. You know, surely that means it's going to go long. And I would say to you that, you know what, divergence is great when it agrees with what the real market is doing. This divergence is trying to reverse what is a very, very heavy push down. I wouldn't be taking it. I would not be taking it. It's clean and it looks really nice. And you say, well, you know, that's, and the problem is, right, this is the knock-on divergence that people say, you know, it never holds up when you need it most, right? So, and that kind of frustrates me a little bit, because it's like, you know, have you not been listening to what we've been saying for the last 5 years? Like, divergence works best when it's actually in the direction of the trend. It should not be used as a tool to reverse a market. You know, this is clearly in a downtrend. I mean, this is a daily chart, right? And you go to a weekly and you see the same thing. Like, look at the weekly. That looks even more ugly than the daily. Look at that. You know,
if you're trading divergence, so Ty, you're probably 17 days too late. 17 candles back is where you want to trade the divergence.
Yeah, I know, but people look at that, and I know people look at that and say, well, that's divergence. They draw their lines. That's B-class divergence. You know, it could be double bottoming. Like, really? Yeah. No, not really. Yeah. And you know, and you're right. But the problem is, this is where divergence can be a little bit tricky. You need to use it as your friend, definitely. There's no question about that. But it's your friend when it's actually agreeing with what you're actually seeing in price action. Nothing trumps price action, right? That's I can't emphasize that enough, and we talk about it a lot, but it's so important that nothing is more important than the price action that you're seeing. Take off all the indicators, everything off the screen. That is the most important thing. So when I see price action like this, that is absolutely bearing down and pushing real weight, real stress on this level. You know, that to me, this means nothing. This MACD might as well not be there, because it's never going to convince me that I'm going to trade this long. All right, so does that make sense to everyone? I know it's confusing, because divergence can be one of those harder things to explain, because, you know, it kind of, when it suits you, it's perfect. But in this instance, I do not see how this is going to help this. Okay, that's probably my point here. And to trump that up, you can say that, you know, if you look at the moving averages on a very serious time frame, the 50 and the 20, right, on the daily, they're not diverging. Yeah, if anything, they're maintaining their distance apart and actually starting to move away from each other again. So, yeah, that tells me, just like Kilted said, that even if you're going to trade this divergence, it's really too late. Because all this is doing, this divergence, right? And this is probably, actually, this is going to be, let me work out a way. Let me work out a way to explain this that I can hopefully get it across. All right. Yes, here we go. Because the bigger time frame, moving averages are actually moving away from each other, the bigger 20 and the 50 on the daily, right? We are still very comfortable that this is going short and putting extraordinary pressure on this level. The only reason that this divergence is actually happening, right, is because that's only using a 12 and a 26 moving average. Now, a 12 and a 26 moving average is being very heavily influenced by what's happening in all of these candles here. And these candles here are all basically replicating one another. You've got big range-bound moves, but they're not really showing any form of breakout. So these are kind of causing that divergence, because the moving averages on the smaller moving averages are actually coming together, but they're not coming together because we're getting a consolidation of price. They're coming together because the price is being forced down, and it's trying to fight it, but it's staying very, very, that's a very busy little period here. This is a daily chart. We've had a very busy few weeks, especially from this part here, okay? And this part here is heavily influenced what's happened on the 12 and the 26 moving average, okay? But the bigger ones tell me no. The big ones definitely tell me no. Yeah. Can I just get Ismo, if you're there, mate, can you just turn your microphone off? Just mute your microphone if you could, please.
Follow up on my request.
Yeah, see how you go with that one, if you can do that, because we're getting a lot of background noise from you, that's all. Okay, I've worked it out. I've been able to mute him. I hope he doesn't need to say anything now. So does that make sense? Does that make sense why this is not really, you know?
Yeah, it does. The other way of describing it, Ty, is if you look at those last three candles, including the current one, they're all nothing candles, because they're all forming inside that bearish engulfing. So it's all inside bars. Those last three daily candles are all inside that massive down move.
Yeah.
So
exactly.
Until it breaks either way of that, it's really, you know, it can go anyway. But yeah, it's looking very bearish.
Looking very bearish. Fabio asks the question, what kind of movement would make me change my mind about the direction of that pair? Okay, it's a really good question, Fabio. What I would do is it Fabio or Fabio? I'm not really sure exactly how to pronounce that. Hopefully I pronounced it right. Sorry if I didn't. The only thing that would convince me that this is going to maybe hold up at this level is a change of trend. We need a lightning bolt on a bigger time frame, like a daily. Like I wouldn't be taking a 4 hour or 1 hour. It would be nothing short of a daily change of trend. So what we want to see is a series of higher highs and higher lows on the daily. Now, what that would represent is about a week or two's worth of action at the very least, and that would be enough to convince me that the market has considered this level and has made a decision on which way it's going to go for all manner of reasons as to why. That's what would need to happen for me, okay? So it can hover around here all at once, but until it actually starts seeing momentum, where we start to see a higher high, higher low sequence on a daily chart, and nothing short of a daily would do it for me, that would be my reason for actually changing my mind and actually starting to look for the long opportunity on this one. Now, in no way, shape, or form am I going short until this breaks. Make no mistake about that. Like, am I wanting it to go short? Absolutely, because it's a better trade. I think there's 150 really easy pips once it does eventually break down before it even finds any sort of support. But I will not trade that until I get the signal. And that is a really, really important factor. No matter how clean this looks, it won't be a trade until we actually get the break. Okay, so just be really, really mindful of that, because sometimes it's these ones that will get you killed, isn't it? The ones you wait for, they look like it's a no-brainer, because it does look like a no-brainer, but yeah, they're the ones that will get you. And this is consolidating at a very, very important price. You know, basically 24 hours before non-farm payrolls. That's how the game works. We know this. The US dollar yen's exactly the same. They're all at very key levels. Whether the numbers are good, bad, or ugly, well, who knows what that'll do to the currency. I mean, you know, we can't really interpret those numbers because we don't know whether they actually wanted to go up or down anyway. But needless to say, though, they've found themselves at these gravitational pull zones of really heavy support and resistance, as they always do, and that is expected. So I definitely wouldn't be trading this before, even if it did a little mini breakout before tomorrow night. I wouldn't even take that, because you could fully expect that would reverse really, really quickly. So you've got to trade this with a great deal of caution in the next 24 hours. But in saying that, I think that next week, when we do get the breakouts of these levels, I think we're going to have a trading bonanza. I think the trends are going to start, and I think we're going to get some really, really good trending action for the rest of the month, because I think they warrant some pretty big moves. But I guess my question is, can everybody see why I want what I want to happen on the dollar index? That's probably what I really want to emphasize tonight. Why I've got that bias. It's not that I really, really want you know, a negative euro USD. It's because it's a cleaner trade. That makes a lot of sense to short from here, whereas the long has a lot of work to do. Just like you know, Fabio said, asking the question, what would we be required to go long on this? Quite a bit, probably about a week's worth of price action to make that go long. Whereas, you know, 2 days of shorting, or one good day of shorting to get past this level, and we are in. Same as that one good day of longs, we're in. Same as that. You know, one good decent close above that 20, we are in. Aussie break of this level, we are in. Whereas the reversals are going to take quite a lot longer. And that's why I want the market to do what I want it to do, not because I hate the euro and, you know, death to the euro. So does that make sense?
For the answer, Ty. It was clear. Yeah.
Excellent. I'm glad. Hopefully, does it help everyone else? Does everyone know what I'm talking about there? Can you understand why I've got a bias, even though I say we shouldn't have a bias? It's not really a bias. It's a want. It's a need. It's a need, Kilted.
It's like the least resistance path.
100%. It's the path of least resistance. That's the best way to trade. It doesn't matter when we're trading, whether it's before non-farm or whatever it is. The path of least resistance is always the best way to trade the market. That's the way I always look at it. It's no point being the one, you know, forcing something onto the market. The easy trade is the trade that that we've just highlighted on all of those pairs. So hopefully that makes sense to everyone, because it's a really, really important. It's probably one of the most important lessons, because what I find is, especially when people are first starting out or learning the trade, is they find themselves gravitating to the counter trend. They find themselves wanting to do what the market doesn't want to do. They want to almost bend and shape the market to their will. Now, that's never going to happen, right? It's never ever going to happen. Doesn't matter how good a trader you are. Good traders are good traders because they actually trade what they see, and they work with the market, not against it. There's no good traders out there that work against the market. I can guarantee you that. And if they did for a little while, it's not going to go for very long. But the other thing that I can assure you, and you know, like I said, we train a lot of people, so I know this as an absolute fact. One of the biggest problems for a lot of people is they're always trying to do what the market doesn't want to do, and that can be counter trending. That can be, you know, doing all sorts of things that just don't make their life easy, if you like. You're not taking the path of least resistance, Fabio. So that's what it comes down to. So that when you bring that into your trading and you look yourself, there are two things that you've got to do. There are two things that you've really got to do, and I do it on a daily basis. Okay, and I promise you I do this. I put the boot on the other foot. So if I'm going to go looking for a short on the Euro USD, I start to think to myself, why would anyone want to long it here? And that's not being a smart ass question. It's literally looking for reasons why. Why would somebody want to be longing this? Now I'd be saying, okay, they could be looking at that MACD divergence perhaps. They could see this as support. They could see it as a consolidation. So I start to map out why that would be the case. And then again, I come back to my case and say, well, hang on, well, why do I want to short it? And it's the body of evidence versus the other that helps me convince myself that actually I'm putting the weight of numbers in my favor. Now, Pressik does it for you. Anyone who uses Pressik knows that does it for you. That's what the whole Pressik system is designed to do, right? But I don't need that because I do it myself. I created the damn thing, so I know exactly what I'm doing because I'm in my head, I'm running the Pressik system anyway. By doing that, I'm putting the boot on the other foot. That's what Pressik forces you to do. It forces you to put the boot on the other foot and understand, even though it's not technically asking you the question, it kind of is. If you read all of the questions inside of Pressik, as you're entering them, you'll come to realize that what it's actually trying to do is taking the contrarian view and making sure that the contrarian view isn't stronger than your view. And that's how the score comes up. So that's one thing that I always do. And then I look for, the second thing that I do is look for the easier trade. Which one's easier? It's really what it comes down to. Is it easier to short this, or is it easier to long it? And at the end of the day, that logic, although it sounds really basic, and you probably think that is a little bit too basic to be true, it is true. Okay, so you know, what do you think about that, Kilter? Do you apply similar? I know you do a bit of counter trending, but your counter trends are generally very considered.
Yeah, I agree with that. Yep, I totally agree with that.
Yeah.
You're sort of trying to move with the market, but it's more the trying to work out what's in your favor. Like in your case, what you're saying is you're using what I describe as our sort of sector analysis tool, which is the currency strength, in this case, the US dollar, using that to give a bit of a data bias and support behind, you know, whatever move you're going to look at, in this case, the Euro USD. So yeah, that makes sense. There's easier bias to the downside if the US dollar keeps going up. Yeah, it's just simple correlation. It's just the same as what Tom does in stocks, right? He's using sector analysis. We're doing the same in currency. I trade nothing. Let's be clear. I trade nothing before looking at currency strength. It is the number one thing for me above all else. I could trade a chart without any indicator on it. I'm looking at currency strength number one. Yep.
It's so important. It is very, very important, and it is very similar to what Tom does with the sector analysis. And Mark says here that you have to challenge your confidence bias to prove your intended strategy. Yeah, in a way, yeah. But so what brings people undone, Mark, and everyone who's probably thinking this, is that the fact that a lot of people see what they want to see, and the problem with the market is it can be very subjective. So if you're only looking for what you want to see, you kind of got the blinkers on, to put it in a racehorse mentality. You're only seeing forward, you're not looking sideways, right? So the reason we put blinkers on horses, I'll tell you a little story, because as you know, a lot of you already know that you know, harness horses are my hobby. So that's what I do in my pastime. So, you know, the reason we put blinkers on horses is to stop them from looking around and taking all the things in. So they're not going to get scared of a kangaroo. They're not going to get scared of the winning post. They're not going to get scared of the crowd. Some horses need to be completely focused. But in saying that, you know, the horses that don't need blinkers are generally better, because they can see, they can take everything in, and closed blinkers in particular. And what happens with people especially when they're first learning to trade, is they can quite often go in there with the closed blinker approach, in which they've made up their decision. They're looking forward. They're not looking sideways. They're not looking to the left of the chart, You know, they're not looking at the multi-time frame, which is kind of to the right a little bit. They're not really encompassing everything there is to know about that trade. They've made a decision, and they're gonna go with it no matter what, you know, and no matter what the bias might be to the contrary. So it's a very bad habit to have. Let me tell you that. It's a very difficult habit to break too, by the way. And it does take a little bit of doing, but realistically, you've got to be open-minded. If you, and just to go on what Mark said there, you know, if you can't challenge your own confidence in the bias that you've got, then, you know, are you really that confident in your strategy? You know, if you're not looking at the picture and being able to challenge yourself with the, you know, what would somebody else be thinking? Like, I'd be looking at this saying, well, you know, why would someone want to long it here? If you don't ask yourself that question, then you're either doing one of two things. You're either putting too much confidence in your strategy, where you think that anyone else's opinion or the market's you know, general opinion doesn't really matter, or you don't want to know that opinion. I'm not sure which is more dangerous. They're probably both as bad as each other. But never be afraid to challenge your own thought process. It doesn't mean that your system's broken. It just means that you're stress testing it. That's probably the best way to say it. You're stress testing your system by making sure, or it's not even a system. It's your idea, because the system doesn't necessarily mean, just because it's not going to work once doesn't mean it doesn't work. So what you're doing is effectively, Mark, you're stress testing your trade idea. That's the best way that I can describe it, by looking at the, you know, if you were going to buy a business, for instance, and you're going to get, say, a DD team in to come and, you know, check out that business, what they're going to do is they're going to stress test all of the things in it to make sure that what would happen if this, what would happen if that, can it hold up to this, can it hold up to that? It's very similar in a way. That's what Pressik does. Pressik stress tests your trade idea, and people don't like the score. It's amazing how many people actually, you know, see a bad score and they'll trade it anyway because they say, well, they know better, and that's perfectly fine. Sometimes that actually works out. But all Pressik is trying to tell you is, if the score is really low, what it's effectively trying to tell you in no uncertain terms is that there's as many reasons that it's not going to work out as there is for it working out. Now, it could still be a 50-50 go, right? It doesn't guarantee that it's not going to work out, but what it's telling you is there's enough reasons for it to go the other way as there is for it to go your way. Okay? Does that make sense?
Proving the opposite is scientific method.
So who's that? Hello? Who did I have there? I missed your name. Was that you, Monica? Identify yourself, speaker.
Hi, Ty.
Hello, how are you? Great. See, this is what happens at Q&A. You can actually voice your opinion. So could you just explain what you said there?
No, I'm overcome, but I think you get my point.
But just elaborate for us. Don't be overcome. Say it. You'll be right. This is, if you were in a Q&A, if you come to Q&A every week, you'll realize everybody talks in here. So go on. Explain what you mean.
Sorry, Ty, I can't do it.
Okay. All right. We'll have to get you on and explain it next time. But look, it really is important though, and this is why I can never speak highly enough of the Pressik system, because it forces, whether people like it or not, it forces people to test and stress test their trade idea. Now, some people aren't going to like the answer and they're going to trade it anyway. That's fine. But at least what it's doing is, if you can't do it automatically by looking at the chart and identifying all of the potential risks in that trade, the Pressik system does it for you. All right. So never be afraid to use it. I know most of you in here have access to it. Occasionally just throw it in there, especially if you're a little bit undecided. I think that's probably the best time to try and apply it. If you're a little bit undecided and maybe a little bit unsure, it's probably the best time to actually use the Pressik system. See what the Pressik system says, because it forces you to actually put all of the inputs in to make sure that you're covering every single base. So hopefully that makes sense to everyone. But good question, good couple of questions there that we needed to address. So let's move on. Let's continue. ASX 200. It is.
Ty, can I just butt in?
Go on.
I think what Monica was saying is that using the Pressix system is kind of like developing a theory with using scientific method. So you're actually testing and you're getting results and data, and you're looking at the highest probability setups. You're not just jumping in on emotion and deciding that this is how it's going to go because you think it's going to go that way.
Thanks, Dave. The opposite is the null theory. So you have to look at the opposite and the null as well as what your thesis is. Thanks, Dave.
Yeah, and that's 100%. If that's the intention of that, that is 100% correct. Very, very important, and it's amazing how many people actually fail to do that because, and it comes down to the blinkers theory as well, in that people get afraid to test, like whether it's because they're stubborn or whether it's because they're afraid to actually be wrong. All of these are psychological, inconsistencies in trading that we have to deal with on a daily basis. Yeah, regardless of the effect, there are many causes for why people refuse to be wrong, and one of those is actually refusing to, acknowledge that there might be a different view. And this is all relates back to module 5 of the Ultimate Masterclass. Like you guys, a lot of you have done it. You know this. The fear factors, the refusing to be wrong, all of those things matter a lot more than people actually think. And it all leads you to actually being complacent in your analysis, because a thorough analysis explores all opportunities. And I'll take it back to something as simple, and it's not simple, it's probably one of the most complex things we've ever done, but it takes it back to, say the vaccine, for instance. The vaccine for coronavirus, they didn't just take the good results out of all of the testing and say, all right, we really, really need this vaccine. We really, really want it, just like we want to do a trade. Let's ignore all of the bad stuff that's come out of the testing and only look at the good stuff and run with it because we really want to take this trade. Of course not. I mean, some people probably believe that that's what happened, but I don't believe that at all. Otherwise, we wouldn't see the bad statistics in some of the things. But in saying that, everything is tested on both sides. And it's really important to know the stress test of everything that you do, and it's very, very important in trading. And as Brad says it, don't be a stubborn bastard. Got it? Yes, that's pretty much correct. So speaking of stubborn, the ASX 200 is being a little bit stubborn in that it doesn't really know what it wants to do, and it's kind of fighting hard to stick into this level. I look at these 3 candles and I say, well, they are 3 big rejection candles. There's no question about that. It's tried to push down lower than the moving averages 3 days in a row. Okay, and they are serious rejections too. Like they're 2 hammers in a row, right? 2 pretty big hammers. So, and when I say big, you're talking about a high of 73.80 all the way down to 73 sort of 15 at its lowest, 73.10 there. So you're talking about 90-point ranges on a market that, that's a pretty big reversal on 2 days in a row. Now, it's had its positive day, but it's still not really convinced of where it wants to go. But then we go to its, to the rich brother, which is the S&P 500, and all it wants to do is go long. Now, you look at that and you say, well, is it going to pause? I don't know. I mean, I don't know whether it's going to pause or not. I look at it and say, I wouldn't take this long because there's no real technical reason to do so other than the fact that it's just going long. The only reason, if you were jumping in right now, the only reason you would be jumping in on this is because it's going long. I can't see a technical reason to go long on this trade. There was a lightning bolt here, right, to exit out of this. This is where we entered. Thomas and I made no secret of the fact that we were going long here, even though we didn't want to, because we wanted it down here. We wanted it lower, and it didn't get there. That's okay. Once it did the lightning bolt, and it broke past this level here, we were long. But guess what? Dave, where were we out? Where did we take profit on this trade? Can you tell me? You know where?
At the previous high.
100%. Because and why is that? Because that's the easy money. That's the path of least resistance. That's the one
Although it gave you the retest entry for the break above too.
It did give you a retest entry, but it was a very shallow one. And I would have liked, when I see a retest entry, right, I look at it the same way as I look at this. So if I'm going to enter this lightning bolt here, I look immediately to what I see over here. Where is the easy trade going to be? Now, the easy trade is going to be straight to this level here. Very easy, right? There's no question about that. Bang, straight up. Now, the only problem with this, and this is the only problem with uncharted territory, so it's something that you've got to be a little bit careful of, and I certainly am anyway, is it wasn't a pullback that warranted an easy trade going longer. Now, if this went all the way, say the first couple of breakouts went all the way up to this current level now, and then came back and tested it from above, that to me is a lot stronger play, because why? Well, guess what? We've got a new target to aim for that is a reasonable risk reward trade. So, we've got the best part of, 100 points from the level that it's pulled back to. That's an easy 100 points, the easy money, I call it. But this little pullback here was very, very shallow, right? So the easy trade here was only to there. And then after that, it's kind of in no man's land again, because it's trying to break to new highs. Don't forget, this is not a stock. This is representing the top 500 companies in the US. So it's not like a stock that's getting excellent results. It's not like a Tesla, say for instance, that is just making record everything and blasting through and could continue on to God knows what. The indices are not like that. It's based on a lot more information. So when it's going longer, it's got a lot more to consider. It's not like something that's a great report, or one single great report, or one single great earnings, or one single great deal is going to make it blast to the stratosphere. This is not going to blast to the stratosphere. It's not going to go to 5,000 overnight. Okay, you can't do it, because there's too many things. There's too many underlying companies and news and all sorts of things that will not allow that to happen. It doesn't mean that down here won't explode up to a new high, but it's not just going to go blasting into new highs. So that's why I treat something like this with trepidation, because I know that every point pushed up is going to be a point that's struggling to break down a invisible wall, if you like, because it's never been there before. Okay, so that's what will happen in time. So that to me is not the easy trade. But if it did, a move up there first and then pulled back, that's a different story. So you say, well, what are you talking about, Ty? Are you crazy? No, I'm not. So if it comes back now, right? If it came back, say it had a night of selling. Now, it's gone up. I know people think this thing's invincible, right? 1% down overnight, and or 1.5% down, you will see this back here. I'll be doing a Friday wrap tomorrow morning with this right back here. And guess what? All of a sudden, that's a pretty sexy trade to the long again, right? Because it's come back to the roll reversal. It's a 20 moving average right there to help it on its way. And more importantly, it's got a new target to aim for that's already broken through all of those barriers that we've just discussed. New levels, new this, new that. So it's got a very clear target to go for. So that's what I'm looking for. So that's why I say, as a trader, I wouldn't short it either, by the way, because there's no reason to short it. There's no reason to short it. But right now, if you're not in it, there's no reason to long it either. All right, even though it looks like it's going like a bull at a gate. Does that make sense to everyone?
Yeah. What I do sometimes, Ty, with that is I look at the measured sort of pullback, and then I just trail it. I don't really care where it goes. If the market takes me out, takes me out. But if it keeps on bulling up, or it keeps on going short, at least I'm still in it and lock in profit.
Yep. And that's what I mean. If you're in it, I mean, you could do those sorts of things, but there's no way on the planet that I would open up my chart this morning or tonight and look at that and say, I'm going long right now. Because there's just no reason. I cannot find the reason to go long on this right now, even though it looks really, really strong. And I think that's where FOMO kicks in. Tom talks a lot about FOMO. That's the FOMO that we talk about, where people think, oh my God, I'm going to miss this. This is going to 5,000. Oh my God. How are we going to get in on this? I've just got to jump in. Because you know what's going to happen when you jump in, right?
Yeah.
Yeah. So that's why.
What I'm trying to say is, if I was in that, I'd be trailing it now.
100%. If you're in it, that's what I mean. If you're in it,
Yeah.
different, very, very different story. But this is not where you get in. Yeah, I know what you're saying, and you'd be trailing it probably by maybe the fractals that you were talking about the other day, or probably by higher lows or what have you. And if you do that, sometimes you're going to get some god almighty long runs, and they're going to be great. But this is a no-go zone for entering right now, because there's nothing there to tell you to get into this trade. Now, I hope that makes sense to everybody, because it's really, really important, because this is the undoing of many an aspiring trader, of just jumping in on a market that they want to get in on, especially on an indice. Okay, if this was a stock, imagine this was Tesla. Okay, and Tesla looks like something similar, or even bigger. That's a little bit different, because although you're not getting in on the exact spot that you probably want to, or on a pullback or something technical, you're trading it for a different reason, because Tesla could technically double again without pulling back. But this is an indice, okay? This cannot do that. It simply can't, because of the mechanics of how it works, okay? Because it would require an extraordinary amount of companies in the US all doing effectively the same thing for this to shoot the lights out at a new level, okay? So,
Ty, can I ask you a question, please?
Yeah, of course.
Yeah, so for entering for this trade, I would enter with the big engulfing candle that crossed the 20 and 50. Am I right?
This one here?
Yes, this one here. And if I took the close of this candle, the ratio between the RR ratio will be half, which is bad. That's why I didn't get in here.
Yeah,
because I know my trade my target should be the high, the previous high, and then if I need to put my stop loss previous low a little bit more, then the take profit won't be appealing. It's half of my risk.
Yep. I tell you how I traded this trade.
Yes.
This is the lightning bolt we were looking for. And I've got to say, during this candle, I did not expect that it was actually going. I thought it would fail here for sure. I was not expecting it to close here. But when it did close here, the open, I didn't get the exact open because I entered it on a smaller time frame. But once it actually opened higher, that was my trade. Now, you are right that the risk reward isn't exactly 1-to-1, but my stop loss was a fairly tight one, and it was just below here. Just below these two candles here, because that's all it was required, because it's the bottom of the lightning bolt. Now, although that is not exactly 1-to-1, it's only, I mean, it was, I reckon I got in, it was about, I think it was the 44.50 nearly exactly. It wasn't right at the very bottom of the candle, I know that, because I waited for a bit of a pullback, but that was where I got in, and, you know, I only took, or when I say only, I mean, it wasn't too bad. It was about 100 points, but the stop loss was about, it was more. It was about, I think it was about 0.8-to-1. But sometimes though, we can't help where this level is. That's the thing. And I wouldn't, and this is the thing that I probably, it's a good question too. And this is where I probably want to stress that if a trade is still good, and it was, right, above the moving averages, you had everything. It had pretty much everything that you would have wanted to see, short of, you know, it wanting to pull back higher. I wouldn't take the reward to risk for granted if it meant that I had to go past a previous support, a previous resistance like this, and fight it. I would sooner take a 0.8-to-1 and take it at that level than risk it turning around here and not quite hitting my target, because I'm hell-bent on getting a 1-to-1, if that makes sense.
Yep, 100%. Thank you.
So if the trade, and I'm only talking about quality trades, right? I'm not advocating that you take less than 1-to-1 risk all the time, but if it's a quality trade, I mean, you know, this was happening in front of us. I think we did it at one of the webinars. You could see it was happening, and you just had to jump in because it was going to be a pretty easy trade. You could just see that it was going to go there. Now, although, you know, we could have made the stop loss probably closer if we really, really wanted to, but I find that, you know, 9 times out of 10, if you follow the rules, yes, there's going to be times where you're not going to make as much. Yes, there are going to be times where, you know, you think, far out, I wish I had left it in. But most of the time, I'm pretty satisfied that I got a good move. I don't look at that and think to myself, far out, I really took that too early. not in any way, shape, or form. I'm very, very happy. I look at that. I look at, and as crazy as it sounds, I look at that. I look at the close there. I look at the entry point. I look at that. I take my profit there, and I just sit back and say, you know what, nailed it. And I don't look at that and say, damn, I missed it. I look at that and say, I nailed it, because I know that if I do this 10 times out of 10, 8 of them are going to actually work out, and I'm not going to be ever worried about anything. Now, other people might look at that and say, well, I'm going to take part of my profit there and let it run. That's perfectly fine as well. But I'm a very in and out sort of trader. I'm very happy to go looking for my next opportunity. And maybe that's because I can see so many opportunities because we see so many charts, right? I'm in a privileged position that this is the job. This is what we do. So I'm looking at, 100 charts a day very, very quickly. I can make, I can find 10 trades that would potentially work out, through stock or whatever it is. So I'm not just looking at this particular trade. If I was only trading the US 500, then I would be looking at it very differently. I'd be taking maybe parts of my profit here, letting it run, doing all sorts of different fandangly things. But I'm a very in and out sort of person where I'm quite happy with that. I look at that and say to myself, yeah, one in the book, happy. So that's how I look at it. And for right or for wrong, everyone's got their own different way, and none of them's potentially wrong or right. But it's just really what works for you. For me, I don't want to spend any more time on that. It was the same with oil. Once oil got to 80, 84, I was done with it. Once oil got to 75, I was done with it. Once oil, they're a totally different trade. I want to change. Once it hits my target, I don't look at that anymore. I will look at this when it's setting up for the next trade. If it's down here, that's how I look at it. Very clean. I don't want to be looking back in time if that makes sense.
Yep. Thank you.
Yep.
Thank you.
Yeah, Tom always does talk about scaling in and scaling out of positions. But he's more referring to. I do agree with scaling in and scaling out, but in very different ways. So, and as an example of that, if you were looking at the US dollar CAD right now, this is the sort of one that you could scale in on because you're expecting a big move. It's a very different trade, right? This is why it's important to understand which trade you're looking at. That was a scalp. Absolute dead set scalp. You can't scale into a scalp. Okay, so in that regard, for RBO, you can't scale into a scalp. A scalp is a dead set trade. And you guys know that I don't mind my scalps, right? I love the scalps. But if you're looking at a longer term, so on the US dollar CAD, for instance, we're thinking 125, 80 to maybe 126. That's not a scalp. That's a swing trade. Okay, so that is a different story. You could definitely scale into that one, and there's nothing wrong with that. Absolutely not. So no scaling into scalps, but definitely you can scale into swing trades. All right, so hopefully that makes sense. US dollar CAD is trying to close above the. It's trying hard. It's trying hard to get above there. We'll definitely keep an eye on that one. But that's So does that make sense, Fabio?
Yeah, totally. Since we are on the argument, can I ask you something?
Of course.
What if I have, let's say, the price action is getting into a clear level of resistance. It breaks out, and then what I would do, I would usually wait for retracement and a retest of the resistance and scaling from there. Let's say half a position. And once it goes past the high of the breaking, I would scale in the rest. Let's say, what if it doesn't pull back and retest and just keeps going? How would you manage those trends? So
what you're saying is you're basically only half the position that you wanted is in,
or one third.
Because it didn't come back. Yeah, sure. What you do there, as long as your target is big enough that it allows you to actually get in and still make good money, I go to the smaller time frames at that point and start scaling in on the pullbacks to the 20 moving average. So say, for instance, it broke out on a daily chart and it doesn't look like it's coming back. You start scaling through the time frames. You go to the 4 hour, you go to the 1 hour, and you can scale in those positions as long as they still make sense on the long, on a pullback to the 20 moving average. Because although it looks like a candle moves so big that it doesn't come back, when you go to the smaller time frames, you'll notice that you're going to get that nice flow Okay, so say on, I mean, the CAD's not a really good example at the moment because it's really only one candle. It's not all that big. Let me try and find you an example. Okay, let's have a look. That's moved too fast. That's not going to be even a good example. You need one that's not moving, like that's not doing everything in the space of one candle. Let's see. I just want to try and highlight what I'm talking about. No, that's not going to work. The problem is all of these candles have actually done their moves in most recently. But what you will find though is when you see a big breakout, like you can see this one's trying to push higher again, for instance, when you start going to the smaller time frames and it doesn't look like it's coming back. So I'm assuming you're letting the daily close. Once that daily's closed, you get an impression that it's not coming back to your level to allow you to scale in again. What you start doing then is going for the it's not really a micro scale. I mean, you can kind of call it a micro scale, but it's not really. All you're doing is you've given up on the level that you were going to scale in on, but you still believe there's enough room for it to go long. And then what you do, you go to the smaller time frames, you go to a 4 hour or a 1 hour, whichever one makes the most amount of sense. And when they pull back, because they will pull back, I assure you, when they pull back to a 20 moving average, you get in. Pulls back like that, you're in. Every time it makes a lightning bolt, that's how you can scale in. So you don't have to completely give up on the scaling. All you've got to do is just be a little bit more proactive on the smaller time frame. So don't expect and sit there and wait, because and that's only assuming you got enough room on the top end. So, and by that I mean this. Let me give you an example. If our target was the green line, let's just say the 200 is our target, not up here. Say our target's here, right? And we want to enter on a break of this 20, yet we wake up tomorrow morning and this daily candle is right there, okay, like only about 20 pips off that target. We wanted to scale in on this trade. If it closes up here, we're going to enter a position. If it breaks a new high, we're going to enter a position, and then we're going to take our profit there. That if this candle went all the way up there and opened up, closed up there, and the next candle opened there, I wouldn't suggest you scale in, because at that point it's nearly at your target. So that's not a good scale. But if it's, so that's what I'm saying. If there's still enough room, but if our target's up here and it does that, that's a different story, because you've still got plenty of room to actually get the other positions in and make them worthwhile. So that's when you go to the
sometimes I don't know if I have to add in on my position or scale out and reward my trade. And
yeah, I
think that what you say answer and clarifies this. I mean, if I have still enough room, I can keep on adding in. If there is no room, I have to scale out and take my profit.
100%. That's 100% correct. That's how I would do it. For right or for wrong, that's exactly how I would do it. Because to me, it's no point scaling into something that's about to end. All you're doing is actually putting your profits at risk at that point. So, you know, so realistically, you've got to be, you only scale in when the target is actually still worth it. And you got to be very honest with yourself at that point too, to make sure that you're not, you know, seeing something that's not there. I think is probably the best way to explain it. You definitely don't want to be seeing anything that that is not there. So that is awesome, guys. We have come to an end. I can't believe it. We're actually overtime tonight. Stephen and all of his options talk has made us go 10 minutes over, which is awesome. Thank you so much for joining us. We had some really good questions. And that's, again, this is why I love Q&A, because we get a chance to actually discuss the questions rather than just sort of zoom through the charts. So we absolutely love them. Thank you so much for all your questions and doing them. The replay will be in the rooms a little bit later, so if you missed any of it, definitely you can catch the replay on it. Monica, thank you for jumping in. We could finally hear you, which is awesome. Thank you for joining us tonight, and everybody who has who come in, even from the public room. We do this every Thursday, and if you can never make it and you want to ask a question, just shoot it into the rooms, and we always try to answer them as best we can so you can actually see them in the replay. All right, everyone, thanks very much, and I look forward to seeing you tomorrow for Friday Wrap and in the Discord room.
Thanks, Ty.
Thanks a lot, Ty.
Thanks, Ty. Goodbye.
See ya.
No worries, team. See ya.
Thanks, mate. Bye.